Hi guys, Greg here from BCR with a market update. Look, after a very eventful week last week in markets, there isn't a lot on the event risk radar to start the week. But having said that, there is a couple of key markets that we should focus on. And the first one is the euro. So euro had a very big move last week. We saw the euro being aggressively sold, 200 points, two big figures lower on the back of what happened with the European parliamentary elections and France calling an early election and the political uncertainty associated with that. So look, if we see that move continue, obviously that's going to feed into a lot of US dollar strength across the board. The key level to watch in euro on the downside, technical level, is 106.60. That's actually the 100-week moving average. It's actually held up the market since October last year, so technically it is a very important level. If we did see that level break, it could actually open the floodgates for further aggressive selling of the euro. And look further out, obviously the next level that we'd be looking at is that psychological 105 level. Top side, a lot of sellers camped all the way up from 107.50 up to 108. So I think it's going to be hard pressed to get through those levels, and that's probably where you'd want to look to maybe re-enter some fresh shorts. The other market that's worth watching is US Treasury market, and specifically the US 10-year. So yields last week had a big move lower. US 10-year yields had a high last week of 4.5% and traded as low as 4.2%, so they're off 30 basis points. And we're opening Asia here just near those lows of 4.2%. So look, yes, we did have last week some marginally lower CPI in the US, but we also did have a Fed that was non-committal on rate cuts and also with the dot plots only penciled in potentially one rate cut this year. So it feels as if maybe that move lower in US yields maybe is a little bit overdone, and especially if you have a look at where risk ended the week with US equities at record highs. So there is a question of whether or not the bond market is actually concerned about something, and certainly if we did see US yields take another big leg lower, then I think that really would beg the question that the bond market is worried about something. Maybe that the risk, certainly equity markets aren't seeing or caring about, with US equities being at record highs. So certainly I'd be keeping an eye on bond yields, and if they traded lower, you're not chasing those equity markets higher because something might be up. And finally, look, just here locally, we've got RBA tomorrow. We've had a CPI number that came out marginally higher, and also employment numbers are still very solid. So rate cuts are certainly not happening. RBA has been sitting on the fence, and there is potential on the back of those numbers to be a touch hawkish. Aussie's just been trading 66 even, 67 range. So potentially maybe a buy on dips here pre-RBA might be the play. Anyway, good luck with the trading, and we'll check in soon. Thank you.